Today, you guys kind of tourist capital nightly strategy podcast for Friday night, February 16th, 2024. We start with the hybrid swing portfolio with Alcoa, 30-minute charts. That was yesterday's trade where we exited near the close. Continuation re-entry, standard risk. R10 rolls over. We take the exit at the VWAP for about a 0.3. No over the weekend risk. AI was no trade. I missed the short side trade. This is one where we had held it overnight as it closed up in this region, but it gapped down to here, and so there was a scratch for the day, and then I missed that shot. Caterpillar, we closed the trade for 3R from yesterday that we held overnight. Cliff closed the trade from yesterday, held overnight for 3R. TVS, we tried the COTA 2 reentry long and then lost half an hour on the rollover. BIA, we closed yesterday's trade for 3R on the gap down. Disney, no trade. Sideways quiet channel setting up. Devon Energy, COTA 2 continuation for an R and exiting in the standard place at the edge of the dragon after the R10 rolls over. So the key to that thing, again, this one illustrates it pretty well, is that as long as this is going up as measured by the R10, then the impulses to the upside, that's good. When it rolls over, now your stop, which is PSAR, accelerates up to the edge of the dragon and then ends up getting you out here. So when that rolls over, it has one or two bars to resume. And if it doesn't, it gets you out of the trade because that run is done. While the price is going up, it's okay to have that much of a buffer to the upside. But once that has proven that it's run its course and running out of steam, that's when you tighten up into here, and that prevents you from getting noised out by those temporary moves like that. Okay, so that's the idea behind accelerating the stop to the edge of the dragon. You go to the spine of the short, do whatever you want. Emerging markets, no trade. Ethereum, no trade in the actual currency. There was a short side trade available. EWW, I tried the short and scratched. Brazil, COTA 2, actually, this is here's the R10 wiggle, which got us out yesterday, and then it just continued straight up. So that's really an emerging dragon. Continuation, standard risk. Exit for 2R. PSAR all the way. This is where the R10 rolls over. That's why this is an appropriate exit here. 2R. China, no trade. Intel, collapsing dragon short. It sold off harshly, ran all the way down, and then ran all the way back up when I took it at the VWAP. So we only cashed that much, and I gave back, I think, way too much. That was sloppy. IP, International Paper. So this was yesterday's. Really, it's like an SSC, and it closed well. It gapped up and kept going, so we put the 2R battle drill second entry on, and all it did was just keep going. I probably could have had a third right here, but I wanted to hold both of those positions. 3, 4. So this one's 4R, that one's 2R, that one's +6, and it's going to be testing this previous high from Monday, and we'll see. If it breaks through, then it can really go, and I'm looking to add a third position. If it starts rolling over, then I'll get out. But we've got some cushion of markets money here to protect us. IYR, no trade. It's real estate, Coca-Cola, no trade. Regional banks, no trade. Everything was choppy and sideways. McDonald's, this was the two position trade that we had from yesterday. It started rolling over, so I exited here. It did not fail, and it started to reverse. When it cleared the dragon and P-star, I re-entered, standard risk. It ran all the way up, and then it started to collapse, so I was happy to take the exit here for 0.5 and no overnight risk. Good trade. The other China, Merck, caught a two re-entry. It's not a re-entry because it didn't have this one, but you would think of this as a SSE here, a COTA 2 that would exit somewhere in here. And then because this is not yet cleared the peak of the dragon, then this is a COTA 2 entry in this region. So it's just a COTA 2. It's not really re-entry, but I think of it as re-entering the trade that I didn't take. Standard risk, run straight up. There's where it rolls over. Take the dragon exit, 2R. You know, 4 months ago, that exit felt new and exciting, and now it just feels obviously routine and a no-brainer. Microsoft, no trade. The collapse here is troublesome. Marijuana, no trade. Nike, this was a huge gap down. So that was the close yesterday. Big gap down, harsh sell-off all the way to the bottom. 1, 2, 3 entry after it clears the VWAP. So that's a low risk entry, and it does nothing but run up. At this point where the R10 peaks, it starts to roll over, take the exit of the dragon. You're going to get out of that anyway because it's near the end of the day, but that gave you 3R. There's something to be said for big gaps and harsh sell-offs and morning hooks. Favorite pattern, because you have a built-in cushion of value. You're buying quality on sale. That's always easier to trust to me than a breakout. It's a psychological positioning for me that if I had something like this and that was the breakout, I have a hard time buying that. Yeah, breakout above the previous high, even though I know it can go. I would much rather see something that closed here and then the next morning gapped all the way here, sold off harshly, and then reversed and gives me a 1, 2, 3 entry. Just call me a catfish or whatever, but I just find it easier to see a support level that was established in the face of a large sell-off. I mean, that's a painful move, but the fact that the first mouse was in there and put that little support in, the emergency support system, and then you get a 1, 2, 3, and I just see that as a low-risk idea that could get to where it gaps down, and then if it breaks through there, I can take a look at that and say there's the 50% retracement. So that's target 1, target 2, target 3, and that is psychologically a lot easier for me to envision than something that breaks out and has no resistance overhead, and I have no idea how much more buying interest is in there. There's something about the fact that it's already been discounted with that sell-off, and we're in the presence of enormous fear, and maybe this fear was misplaced, and that it was an overreaction, and that was the first money's coming in and buying real value and establishing that as rock solid support, and then the bounce can happen in a structured way. I just see that easier to celebrate. So you need to know that about me. PBW, no trade. Rivian, no trade. The S&P, this was kind of a roller coaster today. Gapped down, uh, sold off, rode up, sold off, and then closed here. So this was kind of a people exiting the stage, protect against over the weekend risk, I think. So that was some indecision there. Treasuries stabilizing around 93. Tesla continued nicely today. We had two positions in, one from Thursday, the 123 recovery, the SSC, and then the breakout above here. That's almost like an emerging dragon at the start of the day yesterday, and it closed really well. Today it mucked around, ran all the way up, and then in the midday rolled over. So I just took the exit because I didn't want to hold it over the weekend. 3, 4, 5, 6, 7R on the first one. 1, 2, 3, 3R on the next one. That's a 3-day 10R trade and no over the weekend risk. That to me is sort of the essence of this hybrid swing that we're doing. 1, 2, or 3-day trades, taking real advantage of strength that is temporarily oversold and then rebounds to correct. So the test was what happens when it gets to the previous peak. This was front running that, and then you can see the breakout happens fast. It's like there's all this pressure to keep it below this resistance level, and when the resistance breaks, you get that explosive relief of pressure. That all the guys that were trying to hold it down suddenly get on this side and start buying it. And that reversal of fortunes from resistance to support propels it higher. That's how I'm interpreting that price action. Can't read people's minds. Don't need to. It's the C entry in Walmart. Closed well. Today it gapped up and then drove on. And it was, when it cleared this, and this was already 3, about a 4R in hand. Second position, and then I kept going. I said, what am I doing? Third position, it ran all the way to the top. Here's where the R10 rolled over. I hit the exit button here and got filled here. So it's still a really good trade. You get 1, 2, 3, 4, 5, 6, 7. 7 on the first one, 2 on the second one, 1 on the third one, and that's 10R. And again, no overnight risk. I like this as a recovery trade, even though, it closed down here. I like that as a recovery because it's still above the resistance. So this is Walmart. It could really go next week. I'm liking that one, and we'll be ready to re-enter. U.S. Steel, no trade. Just been too choppy all week. There was some late buying interest, but it's too late to do anything about it. This is at the Walmart trade on the intraday. So this is in addition to the 10R swing trade that you see. This was a big gap up and then a harsh sell off. I tried the short right here because it was dropping like a rock. So I get short with that as my risk, runs all the way down, closes the gap, and then spends 1, 2, 3 without failing further. So I just take the exit and cash 1. It holds support. It starts in place. It breaks out above the peak of the R10. That's an emerging dragon, and it's crossing the VWAP. Notice here's where the new VWAP levels are all day. So anytime price is north of that, that's a good thing. When you see the Bollinger Band mean, this dashed red line, that dashed red line crosses above the VWAP, that is an acceleration to the upside, and that's very favorable. When you see the PSAR, which starts off way down here, it crosses the Bollinger Band mean and then crosses the VWAP here. Those are both indications of strength. So you get the morning hook and then strength. So there's the crossing the VWAP and the SSC. Here's a 3R battle drill, 5R battle drill. Here are the R10 peaks. So I'm happy to take that exit right there. It holds support above the Bollinger Band mean, so that's an automatic Kata2 reentry. It fails just below where it failed before. So this is a scratch. This is the lunchtime chop. Here's the collapsing dragon and the VWAP magnet trade to here, and it blows right through that, and then recovers. And so we exit here after 3 o'clock, just before the close. And that little afternoon trade gives us another +3. That's the VWAP magnet trade. It can't go any higher. It collapses below the chop, collapsing dragon. Your target is the VWAP, and it's not surprising if it goes a little bit further past and then tries to recover. So this one gave us 1, 2, 3, 4, 5, 6, 3, and 1. So there's 10. Here's 1, here's 10, there's 3. That's 14R in Walmart, for crying out loud. It trades like a champ. Everybody has to own it. There's a implied safety in it because it's the retailer of choice for everybody that hates Amazon. George does a nice job with the overnight hold from yesterday. He sees when it doesn't work, he hits the exit and gets paid. There was a Kata2 reentry opportunity there, which was as good as the first leg. So that's leg 1, and you got to see that as leg 2. You've got to recognize that as the Kata2. You have a low, a higher low, a higher low, and a continuation. It's really important to see those turning points in the R10, especially when that holds above the VWAP. There's your VWAP. When that holds above the VWAP and reverses, you can pile on right there. McDonald's. Just like Walmart. I mean, everybody's got to own it. This is Ethereum, so we can't get short. But when this fails and it crosses the VWAP on every other chart that you can short, that's a screaming short signal. The breaking of the VWAP after a 5-day run. I feel like stuck around too long on this one. On 30-minute, this is supposed to go. When it doesn't, there's the crossing of the VWAP. I'm not offended if you get out there, and if you got short there, you're going to make bank on that. Again, there's your V. Respect the VWAP. This is supposed to go. When it doesn't, it's the edge of the dragon. Cut it or cut it and get short, and then you get all of that. Sim Ilker. So all this chopping around, I just think you're jumping at shadows in here. And there's obvious places we should be getting along that we're not getting at all. So and I want to just zero in on the opening minutes of this trade. So this is also a 3 minutes. I've zeroed in a little bit. So here's the opening at the blue line. So there's your OR3. This is a 15 cent MMRB, which is the R10, and that's 15 cents. So this would be the OR3 entry short, and that's where the MMRB lines up nicely with the P-star dot and the Bollinger Band mean, and it's above the dragon. That's just a logical place to say that the downward hypothesis is open. So where does it go? It spends all its time. Now this one, it never even goes negative and then reverses right away. So this one got you out on your previous chart, and that's what started triggering all your overreactions. But there's no reason to get out of that. The dragon is down, the P-star is down, the Bollinger Band mean is down, the VWAP is down. This is still chopping around. Now, if you get out here, you're getting 1.5. You're getting a 1.5 exit here. But and then this is where the R10 reverses. So you could, in this bar, it actually went down this far to plus 3R. And then if you gave a 1R trailing stop, you end up getting out here, which would give you 1.75 R. And then your P star flips here after the R10 reverses. P star flip here, say that's your entry. There's your risk box. And this thing goes up to plus 1.5. If you exited at the latest possible moment when it crosses the VWAP, you still get about a 0.2. If you take a look at where the belly of the R10s are, you would see this one as either a 1, 2, 3 entry here, or crossing the VWAP and the Bollinger Band mean with an entry there, which gives you a risk box like that. Here's where it crosses the P star, but you get a maximum favorable excursion up there of almost plus 2R. So my belief is that you were trigger happy this morning, and that got you into a rapid cycle where you're exiting and entering inside the same bar in many cases, and it chopped you around there. So I would print this out and study that, and put the scaling on there and see what you come up with. It was offset by good work inside DIA here for 2.7, but I still think almost a little too trigger happy in here. Yeah, and you're noticing that anyway. And then the 4R opportunity in the afternoon. And some work on the 2R battle. So some good instructor trading. This is Kevin, sorry. Hybrid frog entry, risk box off the low, managing it carefully, and so he took the most conservative exit at the Bollinger Band mean, but which also lets him stay in the longest, and it's well above the VWAP. So that's a really good preservation of that second leg up. Net's 1.5. That's pretty good stuff. All right, let's look at the daily report, or the weekend report, I should say. Weekend report dated for tomorrow. Normal long-term strength had a today's weakness, gave it a slightly oversold condition. Volatility still warning about risk in both directions for one-day sharp moves. Strong bullish conditions. volatility is normal, and it's still warning about risk off because we're at such elevated price levels. The strength from the start of the month remains, tech, tech, small caps have come along. Finance remains very strong. So the early month winners are still generally winning. 100% exposed in ETF2, all good. Markets near all-time highs. We should be fully invested. Stand by. Let me reload this. Why does it do that? All right. Regression line fractal. The important one to me is the right now is the RL90, which is this green line. I think it's just really strong. It crossed the RL270, back here. The 10 and the 30 are marching their way north. This is where they crossed 90, where they crossed 270. The 90 is really saying the longer term trend is strong, as is the super long trend of the 270. That's all really good. This is at all-time highs. We're not exaggeratedly high compared to the MACD histogram. That's just healthy strength. And it's fully mature because you can see that where the 90 is above the 270. That's really strong. You notice that the 270 barely dipped when the market had the little pullback and then the recovery. That's the buy on dip, and the 90 is showing that it's all systems go. The 3-bar is all good, all-time high. That was the previous. This is kind of your up and handle. That's your 5-2 in the pocket. That's your breakout above the resistance level. This is all good. This little cup and handle is this on the 9-day. You can see that again, we've broken the previous all-time high. This is all good. It's still early days on the 9-day. There's still good room between now and May for that to fully unfold. You're still going to see a lot of administration policies designed to strengthen the economy even further. The daily and 30-minute all looking good. The BMR portfolios, everything's is above its 4-month moving average, except for utilities. Your big winners, small caps and tech, mid caps in the S&P and diamonds. So that's all U.S. right there. These are all the globals down here. Treasury's lagging. That's the risk-free rate of return, right? Treasury bills. When you add the 9 sector spiders, that's the XL, you get finance and tech above small caps, and the NASDAQ. There's your industrials, your healthcare, discretionary, materials, staples, utilities, and energy. So that's really where your tech and finance. That's what you want in a healthy market going. And tech or finance is really crushing it. tech had a little bit of a give back. That's going to be JP Morgan. It's really leading the way. When we get to the symbols, you'll see that. ETF 32, you take and add 10 additional symbols for country sectors and things like Latin America, Brazil, clean energy, commodities, and that kind of stuff. So you're still seeing finance, tech, and small caps leading the way, along with NASDAQ tech. There were a few cyclic moves, like in energy. That's not a consistent long-term sector that you can buy and hold for months and months at a time. These have to be treated as swing trades, and you can see it goes through periods of weekly swings and monthly getting smashed. So you got to take advantage of those when they sell off and start to reverse. And that's when you got to pile in and buy those on dips, and then treat them as swing trades. And you got to watch them as they go through their business cycle, which happens independently from what the S&P is doing. In fact, the S&P rises better when those things are falling because energy prices are falling. Therefore, that's good for the market, the other companies that are buying energy at a cheaper rate. So the things to look at in here, like JP Morgan has been the best financial. It's been better than Goldman. It is 2.3 is better than flat. 7 is better than 2. 23 is better than 17. 16 and a half is better than 13. 21 is better than 16. So in the pair trade between JP Morgan and Goldman Sachs, JP Morgan is your winner. Now, the other two banks at the top of this thing in financial services, you see that they've been crushing even more than JP Morgan. So those two have been contributing to the XLF victory. Let's see. Little market model. Everything in the US is above average, and tech, large caps and mid caps, has been exceptional in the same way that the Qs have been exceptional. And all of the US has been above average, whereas the internationals are lagging. And then inside the sectors, you get finance and tech, excellent, utilities, horrible. And then the S&P is above average at 67. When you come down and look at the other broad asset classes, 67 for strength and equities is crushing treasuries at 44, real estate, blended commodities, gold, and oil. So in the battle of broad asset classes, equities have been crushing it. And then inside the S&P, it's finance and tech. And then inside the world market model, it's the US compared to the globals. Killing it. Inside the weekly ETF2, all green, all good. This is biotech, tech, home builders, home construction. Now notice the mid caps really starting to move up. Growth and technology, technology and finance, NASDAQ, growth index. That's where all the strength is in finance and US tech. That's the engine right now. What's been horrible? Energy, Hong Kong, commodities, China. China is just getting smashed. Go to the daily. We've seen these already, so let's check on yeah, the Dow 30 summary. A couple breakouts here in and Devon Energy and IBM and Techland. Just a handful of things better than 2 to 1 on the auto framer. 1.5DD in Apple, and it was been a 10-day loser, and actually sets up pretty well for a tech rebound in Apple as a swing trade. In the ETFs, you get the globals caught up a little bit today in EFA and EPP. Lithium, the commodity for batteries. Materials had a little bit of a bump, and so did healthcare. Still been looking pretty good. Tech took a day off. Handful of auto framers better than 2 to 1. I like Microsoft. I like Boeing. A lot of squeezes today. You got Boeing, Disney, JP Morgan on a squeeze. I like that. Be ready if you see any kind of upward move. That's a resumption of JP Morgan out of the squeeze. That's good. Being dominated by summer and spring with the recovery of this week. Some big strength here. IBM and Devon, Walmart and Merck. Walmart just crushing it. The globals have been playing a little bit of catch up here. There's Euro-Asia, there's Europe. Long term, I like finance and tech. The Russell was interesting because it's actually long term pretty strong, and there was a dip from the last 2 days that gives you a chance to get small caps on sale. Traders and usual suspects. Let's see. Definite signs of the RL90 rolling over gently. We're still at all-time highs, but that is just, it's slowing its rate of descent as it gets up into nosebleed territory. The RL30 is rolling over. And we just got to respect that and really make sure that we've got our protect stops in. And that's everything for today. We'll get it published and posted. And next scheduled event, Foundations Q&A and Sunday morning. I put a note in on Patreon yesterday. There's a voluntary accountability group that meets to just talk about things together. That's a couple of guys get to it. Doesn't cost anything. The email point of contact is for Damian Brooka, is administering the group and acting as sort of the moderator. But his email is on Patreon. If you're interested in that, please give him. It's a can-free space, so you guys can talk about stuff at your leisure. I'm not interested on that. So see Foundations guys on Sunday. The book club briefings are just outstanding on Wednesday nights at 7. I think if you're not in that group, that I'm going to be offering that as a home study course, as a standalone course. I think it's really, really a good synthesis of our foundational material. And it's the most current lecture series. So take good care, and we shall see you soon. Have a great, safe weekend.